Hi, this is James Shug in Westpac's London office with the Global Economics Wrap prepared on Thursday, the 24th of July. Well, the Aussie dollar traded a slightly wider range over the past week. After the tragic downing of the Malaysian Airlines 777 last Thursday, the Aussies traded as low on risk aversion as 93.40. More recently, earlier today, it was trading as high as 94.80, so there's almost a 1.5 cent range over the intervening week. Key Australian events that have impacted on the Aussie included the Reserve Bank Governor speech that he gave on Tuesday. In it, he didn't actually try and aggressively talk down the Australian dollar like he has done on other occasions. I think that was partly because the inflation numbers were coming out the next day, and he wanted to see what they were going to show. And in the event, they showed inflation, the headline inflation rate rising to 3%, and the average of the various core measures sitting on 2.8%. Now, although the outcome is only slightly higher than market expectations, it nevertheless rules out the prospect that the Reserve Bank can put in place an easing bias, like it had from August to last year to February of this year. Not so much in the statement, but in the minutes to the Reserve Bank meetings at that time, there was a comment that they didn't want to rule out the possibility of lower rates. It's unlikely the Reserve Bank would do that at this juncture, given that inflation's towards the upper end of the band. And Stephen seems to have recognised that trying to talk the Australian dollar down when you haven't got an easing bias in place just is ineffective. The Reserve Bank of New Zealand lifted interest rates earlier today, actually, and but announced a pause in their tightening cycle, and even hinted at the possibility of intervention to pull the Kiwi dollar down. And that saw the Kiwi dollar fall quite sharply, unlike happened with the release of the New Zealand CPI, where that actually had quite an impact on the Australian dollar. Those New Zealand events earlier today really had little impact at all. Internationally, we did see a range of data in the US. It had some impact on markets, including some weaker housing numbers, but very little impact directly on the Australian dollar. In Europe, we had some positive business surveys suggesting that the third quarter might be better than the second quarter in terms of economic growth. We haven't got second quarter figures yet, but it looks like the economy in Europe may have stalled in the quarter just finished, but things might pick up a bit based on the surveys into the third. The possibility of quite harsh sanctions being imposed on Russia gave markets a little bit of a jitter, but I think there's a recognition that nothing too severe is likely to be put into place, given that they'll harm the Russian economy, the European economy, just as much as they might harm the Russian economy. There's a concern that Russia will face east, including turning its gas pipelines in that direction, and that would certainly impact on economies like Germany. In China, the release of the HSBC flash estimate or PMI for July, it was stronger than expected. That gave the Aussie dollar quite a lift, and that's what pushed it to as high as 94.80 earlier today against the US dollar. Since then, the Aussie's drifted down somewhat. We've got a few events to watch for over the next week, which will offer further direction. In the US, we've got figures on economic growth. That's growth for the second quarter, and there's also going to be back revisions stretching at least 5 years. So we'll get a different picture of what the US economy has actually been looking like, and that could certainly impact on the Aussie. We get jobs numbers both on Wednesday and Friday in the US, ADP private jobs and the official jobs report, the two to watch there. We've got the FOMC meeting as well on Wednesday. No press conference, but nevertheless maybe some further guidance from the Fed about the prospects for US monetary policy, and that could certainly impact on the Aussie dollar. The other event to watch for next week is in China is the Westpac MNI Chinese Consumer Sentiment Index. This will be a July release, and it follows a very sharp fall in that index in June. In fact, consumer sentiment has been falling for most of this year so far in China, and it'll be interesting to see if that trend continues or if there's a reversal. And that certainly has the potential to impact on the Aussie dollar as well. In Australia, not too much to focus on domestically. We get building approvals, import prices, a few figures like that. But I think it's going to be mainly international events economic data releases and such that will impact most on the Aussie over the next week. Okay, I'll be back again to talk about those events and more in a week's time.